audio. Yo, yo. Igor, Steven, JH, good morning. Excuse me today if I'm not talking as much. My throat is on fire. I must be getting... Feels like strep throat, but let's pray it's just a sore throat today. If you guys can like the video, very much appreciate it. Yeah, it looks good. Screen looks good, everything looks good. Maddie, I am, thank you. Tan, good morning. Kristen, thank you. Appreciate it. If you guys can like the video, be fantastic. Let's go into today. Sarah, good morning. Nore, good morning. So we talked about yesterday, if you watched the weekly forecast, I think that has a lot of really good stuff in there. If you're wondering on how to prep for a week, how to look at the week and say, well, these are the days I want to be trading, how to come to the conclusion as far as a narrative and a bias on the higher time frame, how to use intermarket relationships, go to last night's video. That's going to help you go into something like this week and prep for it and understand this is what I should be looking for, this is what I should be looking to trade. So, Oki, Cloud, good morning. Somalia, good morning. As far as this week, I mean, overall, I'd like to see lower prices, but we do have this liquidity void where we opened up lower, we gapped lower this week again. So we've gapped lower, we have this liquidity void that is above us. It's interesting if I'm just kind of actually looking at this. So if you look at the micro, and then you look at the actual NQ contract, it looks like there's a little bit difference in what they're doing. Now, I've had this question, well, what does that mean? How do we utilize that? I'm always going to refer to the parent, in my opinion, which would be NQ. I mean, that would be what I'm going to be trading. So, to me, NQ's already made it inside of its liquidity void. I mean, things like that where something moves rapidly, micro, I guess the feed is just not there. So it's a little interesting. We'll just go all of our analysis based off of NQ. Again, excuse me if I'm not talking as much today, or at least I'm going to try not to. My throat is killing me. Like bad. I think I'm getting sick. We filled in about like maybe 10% of it. I'm hesitant to do something with this. I mean, my idea for the day would probably be filling in the liquidity void or doing something with it. We've been a little bit stagnant. It's just a weird price action. We're in a very weird environment. I can see where things could start playing out to where we could start seeing some better price action or some better overall movement, but right now, as far as the daily time frame and everything else, we're really, really strange, man. It's a bit odd. So we'll watch what this open does. Remind me if there is a news event driver today. I know there is. I just don't know if it already happened or I forget. I have to look at it again. We have two of them, or at least one at, it's at 10 a.m. Let me see here. Yeah, so at 10 a.m. So I wouldn't be doing anything with price until we have the 10 a.m. folder. I need back support. Oh yeah, I'm getting old. You getting down with the sickness? Yeah. That is a song. TOK, what's up? Let's watch the open and see how we look. But in general, with the 10 a.m. news event driver, I would rather wait for it. A Monday on NFP week with the news event driver is something that you do want to be potentially looking to trade. I do know that there's going to be a opening range gap. It's going to be from right here where we're at to the top end of that liquidity void. TH, what up, brother? If you guys didn't like the video, I very much appreciate it. George, good morning. A little hesitant to put the opening range gap on the micro contract just because it's a little bit different than the actual contract. It's only because the opening price is different of what we opened up yesterday. So we go over here. This is your opening range gap here. So we have that liquidity void with the opening range gap as well. Basically the same. I mean, there's really not a whole bunch of use to the opening range gap today. I mean, it's basically the same as the liquidity void. So just keep that in mind. I mean, double confluence, I guess. But again, we'll be waiting for the news event driver at 10 a.m. and we'll just kind of go from there. I'm not in a rush to do anything today. Opening range gap and the liquidity void would be like my overall target for today. That's all I can find out of today. Remember, yesterday, if you go to the weekly forecast, that discusses all my thoughts, everything that I'm thinking about. Got 130 of you guys in here if you could like the video, truly. Accidental, yeah. They just have different opening prices. I mean, I just would pay attention to NQ. That's to me what I'm going to be paying attention to. JH, that's probably just your internet. I mean, sometimes that is TradingView in general. It seems like mine's fine. Do you also send signal? Dark Ghost? It depends. I mean, if something pans out, yes. Most days I go into the attention with trading, but if something doesn't come to my criteria, I'm not taking a trade. Yeah, there's always a CJ signal. You can always get that one for free. Anybody use it's called funded what is it called? Funded Futures Family? I kind of like them. They look pretty clean, I'm not gonna lie. One minute FEG. When I'm looking even at a 5, I forget this is a 5. This looks terrible to me. What I mean by that is like the range is really, really small. Again, if I have a news event driver that's ahead of me, I'm waiting for that news event driver regardless of what's happening, regardless of what's in front of me, regardless if I think that price is 100% going to draw to a certain area. I don't care. Why is that? Because I trust my rules. There's plenty of times where, yes, I see a certain model, a certain framework, and I have to sit out of it. It just is what it is. But then there's plenty of times where we've made note through last year with my private group, that type of rule set for me, it's like, okay, this is why I follow it. Because there's a lot of times where the precision isn't there. Things happen. It gets really weird. It's very difficult to trade before a news event driver. And it protects me from a lot of losses, a lot of headache. So to me, it's just better to be patient. I know that that rule for me is very solid. Very, very solid. Regardless to what I'm thinking. Excuse me, my nose and throat, everything's effed up today. If you're just tuning in, if you could like the video, I'd appreciate it. So yes, the micro is a little bit different than the actual NQ contract here. ES has the same relative liquidity void. That's going to be the framework of today, possibly, is looking for that to be filled in. And if I have to sit out of it before the news event driver and it fills it all in, I don't care. You have to let go. If you want to really start following your rules and discipline, is when you feel those emotions of, I want to do something, right? I want to do something. Well, want is, it really is an emotion at times. Wanting to do something versus, this is my rule. This is where I draw the line in the sand. I say, look, I have to follow this because this is what I have set for myself. You can't just follow it when you feel like it and when you don't feel like it and when it only works in your favor. There's going to be times where you follow your rule set and let's say price moves towards, your drawn liquidity moves towards something you're looking for. Just is what it is. Discipline is a bitch sometimes. It hurts, but it's what makes you profitable. It's what makes you successful. And that's why only paying attention to your rule set and not looking at anybody else's is very crucial. Because if you start looking to the left of you, to the right of you, and you say, look, well, this person didn't follow what I follow, but yet they made money, so can I switch mine? No, because they're not you, and you're not them. And that's why it's very crucial to always listen to yourself. And if you agree with if you see what I'm saying, and you agree with it, and you say, look, over time, over a long period of time, not trading before a news event driver that's ahead of you, it's beneficial to me, then I'm going to follow that. And I see the rewards of it. But if you don't see that and you see something different, then don't follow that. That's why people ask me, when I watch you, I try trading and it kind of screws up my bias. And, sometimes I try to trade with your bias and it screws me up because you shouldn't be trading. You should be only listening. Even if you are trading, you shouldn't even really be listening to what I'm saying, maybe just as a commentary, as a background noise, whatever it may be. But you shouldn't be looking at me saying this is what I should be doing. No. You always have to listen to yourself and go from there. Rule sets are very personable. Obviously, you listen to other people and you take their advice and see if it fits for your personality. If it doesn't, then it doesn't. Micro gap is smaller than normal. Yeah, we're only paying attention to NQ. I mean, the reason I have micro up is someone would be trading in if I do take a trade, so I don't want to be analyzing all on NQ and forget that I'm on it and place a trade on it. That would not be good. If you do note, down here, we do have some relative lows before the market opened here. And we'll just put it right there. So in the 1 minute, some relative equal lows here. Almost about 200 of you guys in here. If you haven't already, please like the video. I appreciate it. If you can get to 100, I'll stop asking. Inefficiency here. And again, this is just tape reading. I'm just reading it and seeing what it's doing. Take a look at ES. ES has same relative lows underneath the open as well. Now the framework of today would be to to fill in the liquidity void. But with these lows underneath us, we'll see if that wants to be taken out during the news event driver. Maybe, maybe not. This is an example of immediate rebalance. So price closes, then we open, we drop down, and we immediately rebalance the previous high. And if we left that and moved higher, that's a good example of immediate rebalance. To make note above those highs, ES failed to make this higher high right here. So currently there's a bearish SMT divergence there. So what I would note in these periods of time, especially before a news event driver at 10 a.m., and I have a rule set, right, where it says don't trade before a news event driver. What I like to note is certain models and things that if I didn't have that rule set, would I be trading that? So something like this inefficiency here. The framework today was possibly running and filling the liquidity void. So something like this inefficiency where we ran higher, I could see where you'd be trying to long that, right? That failed. So what do I make note of? I say, okay, well, that's a rule set that's working in my favor. That's the reason why I keep it there. You have to reinforce your rules and why you have them there. Otherwise, you start questioning why you even have them, and you don't trust them. So you have to look for evidence all the time, especially when you have a rule set. Say, okay, well, this is why I follow it, because of this particular reason. It saved me from this loss. It saved me from this mistake. Otherwise, you start to lose belief in it, or you at least don't even have the the confidence behind it as to why you even follow it. Now, even in here, you can make the idea like, well, okay, we ran buy side liquidity. We dropped beneath this buy side imbalance. We could possibly run for the sell side. We could. But I don't care what it does until that news event driver releases. And if I see something after that, then I'll engage with price. Otherwise, I just sit and observe it. It's very stress-free. I don't have to worry. I just sit and observe price. Because as you stack all of these evidence and these things as to why you follow it, there's going to be, once in a while where you don't trade a news event driver before it and a model you see and a draw on liquidity you see works out and you're like, damn, man, why the hell do I have this rule? It's stupid. I could have made this amount of money. And then you go back in your journal and say, okay, well, this is why I follow it, because all this X amount of times I would have taken a loss before a news event driver. Or whatever your rule set may be. You have to have some type of rules, man, and obviously have evidence as to why you follow it. And you follow rules because they particularly save you from losses or headaches or stupid things. And how do you come up with that? Experience, time, failures, losses. Like ICT, that's not one of his rules. That's just one of mine. That's something that I've came up with, I've seen in the market that I know clicks with me. All of you are going to have the same experiences. And that's what most people don't want to go through. They don't want to go through losses and pain. They just want to kind of skip all that, which unfortunately you can't. If you're really about it. Some people just want to take signals and you'll never be successful. I promise you that. If you're just in this game to take signals, good luck, brother. You'll never make it. But if you're really about it, you're going to have to take some losses. You're going to have some heartache, some pain, and that's all part of the process. $3 a.m. hourly candle is low is suspicious, sir. Let me take a look, my friend. I think all of this so far is kind of trash, but I'm trying not to pay attention so much to this micro liquidity void, but it does look pretty clean where we've ran the buy side. We got up in that liquidity void and rejecting it. Because if you look at this 15-minute, it looks a lot different. Jeff, now that it's February, should we start seeing some more favorable price action, or does it usually clean up in March? Yeah, typically in March or in February, at least ICT's rule set is to be trading the second week or start trading the second week of February. So we're not quite yet there. I would say we should start, yes. Usually spring starts to wake up and we start to see a little bit better. No matter what, trading is hard. No matter what, it's never a walk in the park. I always come to the mindset like, this is a war, man. I come in every day like, I'm on edge every day to be prepared. Not with the markets, really, with myself. Jay Abraham's first FEG to new week opening gap, lower quadrant delivery was clean low. Yeah, and that's where, again, this is my personality. I don't care about that particular setup. I would never trade off of that open on a Monday that close early in the session. I just wouldn't. 2 with a news event driver ahead of me. But you may. That may be your cup of tea. That's the reason why, again, I stated that. If a certain rule set that I say clicks with you and you like it, and you see over time this works, stick with it. If it doesn't, don't pay attention to it. The same goes for any mentor. It's what works for me. It's what makes me profitable. I have the patience and the discipline and the non-caring mindset to say, that type of little move there, I could give a shit less. Something else will come into fruition later in the session, possibly. And if it doesn't, I also don't care. I got you. Kutsi charts, bro, what's going on with trading view? It's lagging. It may be a whole trading view thing, to be honest with you. Sometimes it's a whole trading view issue. Yeah, Somalia, if you guys can like the video, truly I appreciate it. So this type of feeling, like, I don't have it as much anymore. It's hard for me, like, I'm trying to put myself in a lot of younger students' shoes, but something like this. This is a 2022 model. Let's just throw it out there, a model. You've taken buy-side liquidity. You drop beneath the buy-side imbalance, showing change in state delivery. You see a displacement lower. You see a sell-side imbalance here. Targeting what? Relative equal lows down here. So you could look at that and be like, man, like I really don't want to miss that. Like that looks really clean. I really don't want to miss that. And again, this is what I'm just trying to harp on today is the rule set, which comes down to discipline, and saying, look, like I have to be willing to avoid that in case that it doesn't work out. That's me following my rule set. And even if it does, it's also not me saying, well, I need to change my rule set. Again, discipline is a bitch sometimes. You're never going to be able to pick when your rules are 100% always in your favor and when they're not. And only pick them when they're working for you. it's just part of discipline. That's part of having rules and part of having some type of game plan. You're never going to have 100% perfect rules, and you're just never going to get that. You want to have rules that protect you more than they don't. It's not that I don't see that there's a model here, but I have rules for a reason. And every time you break them, and let's say I break them and I make money, that's not a good job. That's not a rewarding feeling. It may in the moment because I made money, but eventually over time they'll bite you in the ass. So ES has the same relative lows. We might take those out. Overall today, we'll see where today ends up. I mean, I'm curious of this week is how we're going to utilize this liquidity void and whether or not we completely fill it in, whether we only partially fill it in. It's back-to-back weeks with this, which is pretty unique. Come on, 15 more likes, we get it at 100. Once it gets to 100, I stop caring. It's good enough for me. $100 in the stream. All right, bet. Yep, so this is your first presented FEG. We just kind of stab back into that. Up close candle here would be a potential bearish order block. And again, look at the time. We're about 3 minutes out from the new zone driver. So we ran these lows in here, which are internal from this low to that high. That's internal sell side. So we ran that. And again, the precision before a new zone driver sometimes is just not going to be there. Things are going to get weird. It's going to be difficult to trade it. I mean, I just would rather not have the headache of it. I mean, again, this is the reason why I don't do it. If you short it in here or something, you're looking for that completion, doesn't get there. Again, there's just too much headache for me to try to do it. I'd rather just not do it. So. Rhetorical, do you have an order of thought process you apply every time, or is it different every trade? I mean, it's relatively the same. But every day has different circumstances, different characteristics to it, and different draw on liquidity, different environments. So I think you just simply have to sit with me for a while. It's the same with any mentor, but even with ICD, I had to sit with them for a full year and privately, and then, I mean, multiple years I've had to sit with him to really understand his thought process, and I still really, I don't understand him, but I've taken what he does, and I applied it to myself. Again, if you go to the weekly forecast yesterday, you can see my thought process and how I look at a week and how I plan it out. And that's the thing people don't look at. It's very crucial if you look at my weekly forecast and you go into, like, then you start watching me throughout the week, say, okay, well, this is how he's utilizing all the way back from Sunday. These are the things that I'm doing. And you'll see every day that I sit down and I do kind of the same relative things. I mean, I don't have a whole bunch of models. I have about 3 models that I utilize. I utilize a fair value gap most of the time for my entry pattern. But, yeah, I mean, I'd say it's relatively the same. It's just different circumstances. Every day, is not going to look the same. Same as the weather. I mean, I look at trading as basically the weather. You're looking at your forecast for the week and you say, okay, well, this day's going to be sunny, this day's going to be cloudy, this is this day's 50-50, it could be sunny, it could be rainy. Going to plan accordingly. The one thing I can't teach, I mean, obviously I can give advice, is your psychology. It's the one thing that is extremely difficult to master, man. Extremely difficult. None of this tactical shit will ever solve any of your issues. None of it ever will. It can help. They both go hand in hand, but to really have a grip on yourself and understand how you're going to handle yourself in these markets is the number one thing. So, news event driver just released. Yes, made a lower low. We'll see if NQ wants to drop into the sell side here. Now, if we took out the sell side in here, what would that mean? Well, I would have to see how we react underneath that low and whether we would want to possibly run back above this high in here. Why would we want to run back above that high if we take sell side? Well, this liquidity void is not filled in yet, so that would be kind of our focus of today. We could fail to run this low and still run for the liquidity void. That's an option because of what? SMT divergence. So we see that ES has made a lower low and Q has failed. It's too early for me to suggest that we're going to leave the low. What's another option? This is just me thinking out loud. We could just run this low and we could just keep running off lower. There's plenty of options, but seeing what the market does, then reacting to it is the best option right now. CJ Weatherman. Dell, that was a great weekly forecast. Thank you. So we'll see. I believe we'll probably run out the sell side here. So underneath that sell side, we have an inefficiency which is resting right here. That'd be a reclaimed buy side imbalance. And there's a little one right there. Again, should you look at something like this where we got up into that sell side balance and we sold off? Should I look at that and say, well, that's a stupid rule. Why do I have, why do I have that rule? No. I would say, look, that's part of the process. I really don't care about that move either. It's not. I think as a younger student, I would really be pissed off a lot of times because I think my field of vision was very limited. I would only see a couple models or a couple things to enter into. But now I see so many models and so many things I can enter into that I don't really ever fear missing things. Even if I do miss something, it's like I also understand I can still re-enter the market. I mean, as long as the conditions are right, man, you know, if I had to boost these concepts and stroke the ego on these concepts, there's so many different ways to enter this market. So many times I could enter this market almost every hour of the day if I wanted to. Does that mean I'll be successful and profitable? No, but I could almost show you every single hour of the day. I could probably enter this market all the way down to a 15-second time frame, a 1-minute time frame. What that should do is give you confidence to wait for a setup that's really in your favor and take it, rather than FOMOing into everything, because it gives you the abundant mindset. All I'm really trying to determine here is, since we've taken this sell side here, do we gravitate higher again? Have we taken buy side and then took sell side? Yes, but it's a very small range. And what I meant by that is sometimes that's a seek and destroy condition. Signature is taking both sides, but it's very, very small range. If it was a lot larger range, I'd probably be a little bit more concerned. But to me, the overall draw on liquidity today, again, which is the narrative, the parent, is filling in this liquidity void. So shorting it is really not an option to me today. Unless something really dramatically happened, I'm not in the mindset of shorting it. And since we've just taken sell side, if we start to see upside, we start to see a model that would want to go towards this buy side liquidity pool, then we would take it and we'd want to fill in the rest of the liquidity void. Makes sense? If you're just tuning in, if you can like the video, I would appreciate it. I know somebody's probably going to ask me what I'm playing with. Dark Ghost, rewind the video about 5 minutes. I just answered it. What he asked, I'm going to have to answer it again. He asked, since we've taken both sides, this isn't a precursor to seek and destroy. And what did I just say? What I'm mentioning is, since we're in a very small range, and this may just be subjective, and some people may not understand this, but this is a very small range for seek and destroy. I mean, if it was a very large range, like we're whipsawing very largely, then I'm concerned. To me, it's a very small run on buy side, very shallow run on sell side. It's not a big deal to me. We'll see. I mean, it could be a precursor, but if you also look at ES has relative equal highs that are above it. It really hasn't ran it the way NQ did. So that's definitely a fidget spinner you got there. It is indeed, Abraham. Nikki, what's up? Good morning. So what would I be looking for? Since the bias today is looking for higher prices and looking for that liquidity void to be filled, since we've ran sell side, what would I be looking for? Well, I need some type of evidence to show me that it wants to get there. And what would that be? Well, I need a displacement, energetic displacement, or a shift in market structure to show me that it wants to do that. Right? I need an inefficiency to form. I need to see ES do the same relative thing higher. Those type of things. It's particularly, you really want a displacement above this high. If you're really looking for like a good change of state delivery, I know that word's thrown around so much and people have no idea what they're even talking about when it comes to change of state delivery. They really don't. Looking at breakers is going to help you. So you have a low, you have a high, you have a lower low. If we printed a higher high here, this last highest up close candle would become your bullish breaker. That's going to show you that price would really want to seek higher prices. So somebody could be looking at this and say, well, there's an inefficiency right here. My bias is bullish, I'm just going to long it. Well, it hasn't shown, just because you've taken sell side, hasn't shown me that it wants higher prices. It may be an instance where I pick off the low in here. Sure. But I don't need to do that. In order to be profitable, I don't need to pick off the very low. I don't need to catch a falling knife. And it protects me from losses. That was a mistake I made as a younger student, is trying to pick every single low. Like as soon as we ran sell side and displaced up a little bit, I'm like, okay, I got to buy it. No. Wait for it to show you its hand. Wait for some type of evidence. Even if we made it, let's say even if we made it all the way up here, right? And then there was an inefficiency up here to target that buy side. That's still a good enough amount of handles to make you profitable. I mean, we're in such a very large range right now. That's 40, 50 handles. And even to fill in the rest of the liquidity void, I don't need to pick off this very low because I could very well see where somebody could look at this inefficiency here. And these are your bullish order block and this is your inefficiency. And then they're just taking a loss for no reason. Why? Because you're trying to pick off the very low of everything. It's stupid. It's dumb. There's no change in state and delivery. There's no shift in market structure. There's no energetic displacement higher. And there's nothing there. You just see a bullish inefficiency in a 1 minute time frame and you just buy it. That's dumb. Now, let's just make the case. Let's say if I'm reading order flow so far from that dealing range high to this low, we go up inside of a premium. This is your bearish order block. We work the bottom end of the new week opening gap. And we displaced lower away from it. Does that mean we're going to seek lower prices today? No, but I'm just reading order flow. I'm seeing what it's reacting off of. If we were to head and seek lower prices today, I'd have to ask myself, what is it trying to seek and why is it trying to do that? Right now, I don't really know the answer to that. So I'm sticking with one side, which is really higher prices. If that liquidity void is above me and it's staying as is, I have to kind of stay on side with it. Because as we see here, there's a sell side imbalance, right? But I don't have a particular bias or reasoning as to why we would even seek lower prices from here. I don't know where it's trying to seek. Now, some people may look at that and be like, well, you're just stupid. It's going here or there. The framework every time I take a trade is why should it utilize this? What is the reasoning behind it? What is it trying to seek? And if I was trying to short this, I don't even know what it would be trying to go towards. And that's okay to me. I don't need to know all the time, and I would have to sit out of it. It's also being disciplined and saying, look, I'm staying on the side today of higher prices. And if I don't get it, then I'm probably not doing anything with it. Like somebody mentioned, Matthew, and it's not, I'm just going to use you as an example, could go for 12 a.m. open. To me, that's not enough evidence or suggestion to even take a trade. There needs to be a reasoning, at least from the higher time frame to lower. Why the hell should it even go lower? What's the reasoning behind that? To me, I don't have anything really. Darkos, it could be interested in running the daily sell side liquidity in relative equals and try to rebalance the liquidity void. Yeah, but then again, to me, that's just a suggestion. That I don't have the evidence just yet that I would even want to do that. I mean, if a liquidity void is there, I'm probably staying on point with it for most of the time because it's more than likely going to try to fill it in right away. Rarely does it leave it open or just get up into it a little bit and then leave it. Rarely does it do it. Can it? Of course. But for now, as long as I'm very close in proximity towards that liquidity void, I'm just going to be looking for longs. What would be the point that I start switching? Well, to be honest with you, it'd probably take a lot. It really would. Because this whole run lower in here could just simply be a retracement into a discount. It could be. Right, we could be dropping down into this discount here. There's not much of a bullish inefficiencies or PD raise to work with, but this was the same thing as like last week when I had the liquidity void above me. If I have a drawn liquidity that I'm very much favoring, I just have to stick with it. It's served me right more times than wrong. Since the void is so big, is where we start driving like quarters. You mean like breaking the liquidity void into quarters? Yes. No matter what, if you have really any new week opening gap or any type of void, you do want to split it up into quarters. So we didn't even really make it up into 25% of it just yet. I'll have to flip it so you see it, but each area is going to be sensitive. See 25, 50, 75, 100. We didn't even make it 25 just yet. Which I shouldn't do it. That's my bad, actually. I shouldn't do it on the micro. I should be doing it on the actual contract here. Yeah, I caught myself. Thank you. I forgot. It looks like, yes, we made it at 25. Thank you. I know everybody's going to start correcting me. Sorry, JH, I won't let it happen. But yes, that blue line is the 25% we stabbed up into it. So far, we've been working lower. Now, what could that mean? I'm just throwing it out there. If I had to look at a bearish perspective, we could only get up to the 25%, fill it in partially, and then work away from it the rest of the week. We could do that. It's just since we're so close to it still, it's very hard for me to want to short it. So there's going to be times like this where, to me, it's very discipline oriented. Like, I have to follow a rule set regardless of, like, I can see, a potential side where we really start working off lower. I kind of have to sit out of it. Whether that makes me dumb or stupid, or just disciplined. My view is that discipline is a form of risk management. It most definitely is, yeah. I mean, you can't have risk management without discipline, really, to exercise it. Andreas, did you take any trades? Yeah, we took a long in here for 40 or 50 handles, and we took a short for about 100. You just missed out on it. Those type of people are gonna hate me, dude. It's nothing personal, but I know some people actually generally just want to see if I took any trades to see, but the type of signal mindset, man, I just love playing with those people. It's for their own benefit. It's funny every time. Yeah, I love doing it. Like, if you're curious, that like I know some people just want to learn. If I took any, just say, I just want to see if you took any, just to learn from what you took. And that's okay. Most of the time, if I take a trade, I'll have the execution up anyways, because I know people are asking or want to see it. I'll have those things on anyways. Andreas, yeah, don't take it personal. I just like to have fun. Again, I mean, that's a wicked reaction. This is what I mean. That's a really wicked delivery. Staying on point with your narrative, man. Like, sometimes it's hard to stick with it, but you just have to submit to it at times. Manual intervention. No, but that is a really wicked delivery, man. That's I don't know. The reason I know a lot of people ask me is like about discipline and why. I mean, I hate sounding like this, like I'm some type of discipline god, because I'm not. I'm a human. I fuck up a lot. But when it comes to discipline and following my rules, I mean, I'm like this way so much because I'm very scared of myself. Truthfully, I very am, and I really want to save my mental capital as much as I can, because I could have done a lot in here today. I'm exhausted myself already on a Monday morning. And some people may look at discipline as exhausting. I mean, it is, but I also know myself very well. I mean, if I get off to a really bad start of the week, or if I just do dumb things, man, I know myself so well. I'm very scary, man. Like, meaning in a bad way. I can do a lot of dumb shit. Like, really, really, really fucking stupid. So, knowing that to me is very important. That's just a wicked delivery. I mean, so far we're panning out. We're seeing higher prices out of this, which is good, but the delivery is a little weird. Yeah, we tapped into, again, paying attention to the higher time frame, this hourly inefficiency in that one there. even looking at that 15-minute dealing range, what we're talking about from this low up to that high, I was talking about how we were getting down into a discount. So even though on the lower time frames it looked like sell models, the framework is very important. The narrative, you have to submit to it. Let's take a look at, I mean, we're really rapidly delivering. I mean, this is crazy ass delivery. I don't even want to be a part of this. That's crazy. But we ran out that high in there. That's pretty wicked, like really wicked. Yeah, 200 handles in 4 minutes. We just covered the entire morning range in 4 minutes. What took an hour to deliver took 4 minutes. That's wicked. But everything panned out, right? Again, you can't look at that and say, well, motherfucker, man, why don't I buy? I mean, there's nowhere to really buy. I'm not participating in any of that. That's really wicked. But what you should note out of that is, okay, well, my bias and everything today was looking for higher prices, and we mentioned this over and over again, what I was looking for, and it played out. So on another day, could I go down a 15-second time frame and be like, man, I should have bought here. I should have bought it that first presented. Sure. That's hindsight thinking. But if things were a little bit slower on the delivery to this upside, to get into this high in liquidity void like we planned, I would have executed on it. So everything's there. We followed the rules. I did the right thing. What am I doing? You're reinforcing, you're cheerleading yourself, because nobody else is going to do it for you, man. Nobody else is going to do that. And whether or not you almost have to lie to yourself to a certain extent, that's okay too. Your subconscious doesn't know between a lie and a truth. And that's very important to note, especially within trading and journaling. I used to bash myself so much. And Jerry Tindler talks about it in his book, is if you're super self-critical, the currency that you pay for are losses. You're very self-critical, so you almost every time you lose, it's like a currency, and you want to do it again and again, just so you become addicted to self-criticism. It's not good. Mexico tariffs just paused for 30 days. Yeah, I know there's a lot of shit going on in the world as well, with obviously the inauguration and all the new things that are going to come out to play. So it's definitely not a time to be pushing a lot of risk, man. What's this up close candle here within that inefficiency? And you can include both of these if you'd like, because they're together consecutively. That'd be your bullish breaker there. So anytime I have that, that's just personally the way I mark things up. I like to do this. Because what do you have on this breaker here? Draw it out so you can see it. Right? Low, high, lower low. Then you have your higher high there. Personally, you always get the bias right, but price never listens. You'll get there. Sometimes the you know where price is going, you know the destination, but the vehicle to get there is just, it's not suit, you know? It's a broken down car. It has a lot of complications with it, meaning the model, whatever is there, is very it's very difficult. It's just going to be seasons of a price where you just have to deal with it. And if you're not even taking any trades, but you're getting the bias rate, that's still a win, man. That's still a win. We're going to see in here if this thing really starts to take off, which we might. We could see the CE of it, 75 and maybe 100%. Can you show some example? I'm showing an example of a breaker right now. I'm a little bit colorblind, so it's a bit weird. I got you. I mean, the pattern you need to pay attention to is this pattern here that I drew out. This is the pattern of breakers, and you inverse it for bearish. Low, high, lower low, higher high. Would you have taken this trade? No. I'm watching to see if I'm going to do something with this, so give me a second. Immediate rebalance to that low there, which would be a bullish order block. But if I was to, like, let's say something like this, that inefficiency with the breaker, it's a very large risk to reward, man. That's at least a large risk to me. I mean, if I'm going to be taking that inefficiency, it needs to be beneath the breaker. I mean, I'm risking 60 something handles. I mean, sure, risk reward might be fine, but I'd rather just see a reaction off of it and then go from there. You have to remember the risk is huge right now, meaning price is moving in a crazy fashion. Each inefficiency that forms is you're going to be risking 30, 40, 50 handles probably. So what does that mean? Reduce your contract size. Do not stay with the same contract size you've been doing. And like in smaller, tighter environments, do not be doing the same right now because you're going to end up losing a shit ton more. But I can make more. No. If you take a trade going into it thinking about money, you've already lost. Or thinking about winning money. You should only be thinking about risk. So we drop down into this bullish order block, which is immediate rebalance. Since we're really displacing really quickly, this may really run off the page, meaning into higher prices. But there's a great deal of risk in here today. 15-second, we drop down to this inefficiency here. If it's going to seek higher prices, it should be willing to do it in here. Why? Because we've already dropped down into this inefficiency and breaker. We've moved away from it. We drop down into this order block here, immediate rebalance, and we should see if we should start seeking higher prices. If we don't, could fall back in the range or something. But Mexican president says tariffs from the United States are delayed for a month after a discussion with President Trump. Yeah, so there's some things geopolitically going on as well. Let's look at this 15-minute time frame here. Drop down to this inefficiency here. The CE of the liquidity void is that orange line. They'll pay attention to the micro contract. What is the target for the upside? Well, you'd at least be looking for 75, if not the completion of the liquidity void. So this down close candle here. Should see an expansion here. The reason I'm not really interacting with it is because it is a shit ton of risk. We're already at kind of the CE of the liquidity void as well. So if there's about 300 of you guys in here, if you could like the video, I appreciate it. Admittedly, the 15-second inefficiency was not a bad entry pattern there. Why? Because we've already moved away from that bullish breaker and that inefficiency. We've already moved away from it. So once it moved away from it, let that inefficiency drop down into it. But I don't really have, it's not a great deal of drawn liquidity. I mean, I can really stretch it for the completion of the liquidity void today. It could be a possibility. So since we've made it into the CE of that liquidity void, it's, let me scroll out here. Could see it drop, but based off of the delivery we're having, I'm trying to determine if we're really going to seek the full delivery or completion fill-in of the liquidity void today. I don't know if I'm going to interact with it or not. We're moving pretty rapidly. Like button doesn't refresh itself. I mean, I see 120. I don't know what you see. So that down close candle there would be your bullish order block there. That's a good question, Axel. I mean, we'd be looking for the completion of the liquidity void, or at least 75% of it. But if we're going to seek that, I mean, it needs to maintain basically above this order block. If we collapse beneath that, then that means it's going to return into a deeper discount or do something different. I'm kind of unsure currently. Yeah, half of it got closed as well. So If you ever see me being quiet, it's more or less because I'm really trying to digest price. This would be a good study for anybody that actually watches my camera. If you watch what I do with my eyes, like I'm scanning, I mean, you have to see my setup, but I have SMT to my right, I have a monitor above me, and obviously the one I'm looking at. But I'm constantly looking at all three of them together. I'm just scanning them back and forth. I'm looking at SMT, I'm looking at how ES and NQ are trading together. I'm looking at a little bit higher time frames together. I'm looking at a 15-second chart. I'm looking at the 1 minute. I'm looking at the 5 minute that you see. It's just a constant scroll. To me, if you're only looking at a 1 minute time frame, you don't have enough information, man. I was observing on a 15-second chart. Because as soon as we started to move off of that 1 minute bullish order block, I didn't want that closure there. I wanted a little bit less closure and then this inefficiency to form right here. I mean, this is still somewhat valid. But from here, I think we'll probably seek 75%, if not the closure of the liquidity void. It's some wicked delivery. I'm not saying you should even be participating in this. I mean, if I was to participate, I'm probably going to end up doing maybe 2 micros, if not 1. It's just crazy ass delivery right now. Like, that's 100 handles in 30 seconds. You're going to get your ass handed to you in this environment. So inefficiency here. Axon, no, he has not. So 75% is that blue line there of the liquidity void or new week opening gap. If we drop down on this inefficiency, I probably will end up buying it. Well, it looks like we did, but that was a little bit lagged. Let's see the 30-second a little bit deeper. Look at ES real quick. The reason why I would want like a little bit deeper run of that inefficiency is because the risk is just so large, man. That's too shallow of an IOFED, personally. I mean, it's a 60 handle stop loss. it's a bit much, man. Like, sometimes these conditions are a little much for me to even want to engage with it. Even with reducing contract size, it's still a lot. Yeah, there is a bearish breaker in the higher time right. I see your text. But with this liquidity void and where we're at, I would only be looking for the completion of it. I mean, it's not going to just, to me, it's not going to fill in that much and then drop away from it. Could, but I'm seeing an example here possibly of an immediate rebalance. So we have about, I'm looking at the clock, about 3 minutes until the macro as well. Jeff, yeah, I know. I mean, for the most part, man, I always have a 1 minute and a 5 minute. That's if you sit with me long enough, these are the only two time frames I usually end up showing, or is a 1 minute and a 5 minute. Just for reference. I mean, I can try to do something, but it's usually only a 1 minute and a 5 minute. So we've dropped into this inefficiency. The reason I'm kind of hesitant to even take the long in here is we're about to get into the macro, and I'm just trying to determine if, since we've reached in the CE of this liquidity void, whether we see a drop away from it or not. Akbar, if you want to know what the yeah, you can't send charts, but this is your, that down close candle there is your breaker. Even on the 4-hour chart, that right there. So a little bit different, but you have a high, low, higher high, then lower low. What I'm reading in here is like, yes, did I believe this could have been a decent entry pattern at the time? Yes, but since we've taken 1, 2, 3, 4, 5, now it's 6 minutes into this, it's taken a lot of time to even reach into that. We're about to go into the macro, which could reverse this. Yes, kind of looks weird. And we're reaching the CE of this liquidity void, so we'll see. It still could be valid as far as the long, but In SMT, how do you know which direction is stronger between NQ and ES? Well, it depends. You have to look at their correlated price action, which one's making new highs or higher highs before the other one, or which one's making the lower lows before the other one. That's how you're going to see which one is stronger or weaker. Sometimes the one that fails to make the higher high is going to be weaker. The one that fails to make the lower low is the stronger one. There's a 15-second inefficiency there. So since we've left that 1 minute, it's showing me some evidence that we may want to potentially seek higher prices. I have to get rid of this. I'm going to have a very tight stop, and if you can see, I have very minimum risk in here. This price action is very wicked. Or 30-second, I apologize. This inefficiency of that down close candle. Since we've left that inefficiency, I want to see if that would support it. Again, if you're entering into this market, it needs to be very, very tight stops and low amount of contracts. So we'll see if we can seek the 75% of that liquidity void up here. If we don't and I get stopped out, then we may potentially only fill in 50% of this liquidity void today. Immediate rebalance on the 5 minute. So we'll see if we can expand away from that or not. Drop down on the CE of that liquidity void, so see if we can maintain above it or not. Risk is my surname. Here in the UK, we have a neurotic, and that hits the spot. Nordic, maybe I said neurotic. Nordic. Really bothers me. Every time I click on this new week opening gap, it sends it forward. So I'll probably end up getting stopped here, and from there, unless we reject away from this CE. And here, I mean, this is basically the last point right here. It has to do it. 21,480 is 75%. Target right about there. We'll see. We'll do this for shits and giggles. $5.25. Yeah, sometimes high resistance is hard to determine. I mean, it's not incredibly high resistance, but sometimes you just kind of slow walk it higher. You have to sit with it. I mean, my stop was there for a reason. It's beneath the CE of the new week opening gap and beneath the CE of the inefficiency there. I guess I could put the macro annotation on. I mean, from here, we really shouldn't see a drop. It should be an expansion into that. We are taking a bit of time in here, but nothing's completely any disregarded of the trade idea, so just have to submit. 15-minute basically dropped down into the CE of the liquidity void. JH, what's up, bro? So we opened up a new hourly candle. Let's see what that unfolds. If you look at your 15-second here, drop down in this inversion. Bullish order block on the 1 minute. should be really willing to snap into some higher prices here. I mean, we've really utilized that inefficiency a few times now. So you want to start timing things and seeing how long we've utilized something. I mean, we've utilized this area for a while now. We should really start to see it, especially with the new opening of an hourly candle. So that high is taken. I want to see if we can get it at 75%, which is here. How we trade above that high is very crucial. If we snap back into like where my entry was, it's not great. That means we just took this high. But at this point, I'd almost reduce my risk to underneath this low right there. Since we've moved away from it, there's no reason for it to really even go back down to that area. I just want to see a continuation higher from here. I mean, we could have just taken this buy side here and that was it. But I'm looking for the 75% of that liquidity void at least until a partial. It's not good. So the reason why I did that, I reduced my risk. Again, we could have just taken this high and dumped lower. That's exactly what I was preparing myself for. Could I have taken a partial over the high? Sure, it just wasn't enough. It wasn't the plan to go to 75%. So overall, I don't think it's terrible. It was a small loss. I mean, I'm not entirely upset with it. So if it makes sense. I mean, to me, if I would have seen a closure above this high and just a rip in 75%, that would have been a partial, stops to break even. But since we've taken that high, I need to reduce my risk because at that point, there's no reason for price to even drop back lower. And if it does, then obviously I'm wrong. And you just saw that. So from here, I mean, that's it. There's nothing else for me to do. I'm not going to look for a short, which would mean a potential retracement off of this. The only thing I'd be looking for is a completion of that, which we could still utilize. This inefficiency is still sent higher. Am I going to chase it? No. I've done the work that I was needed to do today. So I'm happy with it. All of you guys enjoyed today. That was fun. It was very interesting delivery today. But hopefully you watched the rule set of the news event driver, staying disciplined throughout that. Staying disciplined with the bias and the overall higher prices. Stay disciplined to that. So that was really it. Make a review tonight and we'll be back here tomorrow. Till then, have a good day, everybody. Peace out.